Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, December the 12th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. Across the pond, we got consumer price index out of Great Britain came in at 3.1%, expected to be 3.0%. That's good for the overall economy. They kind of want to start seeing a little bit of inflation. And then we got their producer price index, the PPI input, came in at 1.8%, a little higher than the expected 1.6%. And then we got core consumer price index coming in line with expectations out of Great Britain. Then the Great Britain PPI output came in line with expectations at 0.3%. So all those numbers actually pretty good. Here in the United States, we got the NFIB Small Business Index came in at 107.5, expected to be 104.6, higher, much better than expected is good. That is a indication of how the small business is feeling about the overall economy, and that's the National Federation of Independent Businesses. Then here in the United States, again, we got our PPI, which was a month over month, 0.4%, expected to be 0.4%. And then the core PPI, which excludes food and energy, came in a little bit higher than expected at 0.3%. And then later on today, we have a bond auction. And Mario Draghi speaking as well later on this afternoon. All right, on to the overall markets. We've got crude oil coming off. It looked like it was wanting to rally this morning off the open, but has since given back quite a bit of ground and almost given up almost all of yesterday's gains, down about 78 cents on the day, but still trending in a positive direction, I believe. We've got gold futures now that it's back below this 50 Fibonacci level. It's looking a little bit more bearish. The next market or line in the sand for it to test is that 1221 area. And I mentioned this before with Bitcoin futures coming into fruition. A lot of people trading that. Gold is probably going to suffer because of people playing that new currency, if you will. And it will kind of act like any other currency and or gold for that matter. So more money going into that are going to be outflows out of this particular asset. And this is what I'm talking about with the Bitcoin futures. Bitcoin down on the day, but up well over what we saw from yesterday. And just keeping an eye on this as a line in the sand to kind of keep an eye on. Bitcoin futures are trading around 17,300, and I talked about this. We are going to be looking at this number. It's right now it's trading 17,327 US dollars. This trading right around $1,000 over what that value is. So if you guys are trying to trade that for a scalp, keep your eye on what Bitcoin's doing in the real market, and this should stay lockstep at least for the near time, $1,000 over that. So that's your kind of gauge as to what's going on there. It's still holding pretty true. Then on to the bonds. Bonds coming off. Economic data is pretty good. Down 21 ticks, not quite a full point. Right here at the value area or the point of control for the volume, where the most volume has been spent, the time it's been spent up a little bit higher. But again, this market has no real room to move to the upside. So any chance you get to short this when it goes higher, I would suggest doing that at this point. It seems like a pretty real trade to do. I mean, that's what I've been playing on, and I got my TLT that's finally starting to turn around. It's been a little too long on the vine to really do a whole lot of good for me, because there's only a few days left. So I need more of a move down in the bonds to get out of my TLT trade. VIX unchanged for the most part, all intents and purposes. Market's moving higher in the equities. That's going to cause that VIX to come off. Nasdaq's been really sluggish and kind of holding off, while we're seeing all-time highs here in the Dow, up 143 points. That is an intraday trade, because this is the Dow Jones average. This is not really a tradable product, but it gives you an idea where the Dow is trading, and it's up about 140 plus points. This is what I'm talking about with the Nasdaq. It's slightly in negative territory. Besides, even though the Dow and E-mini S&Ps and the rest of the equities are doing well, tech has been struggling as of lately. Even Apple has been down as of lately, and I think it was down earlier today, but might slightly be in positive territory, up about, I think it looks like it's up, it's down about 70 cents right now as we speak. But overall tech sector really kind of causing a drag. Intel's down as well. So Intel being down, it's not helping out my Christmas tree that I have on. It was very close yesterday. It's still very close today, but I haven't been able to get out of it. Was hoping I'd be able to get out of this during this vid, but it's about a nickel away. Anyway, onto the E-mini S&Ps, up 6 points on the day, making a new historical high, and it's actually happening basically as we speak. It just happened in the last bar there, which just flipped over a few minutes ago. We were just printing those all-time highs, and up 7 points on the day. So that's what I'm talking about. In NASDAQ, when we're seeing these real all-time highs and across the broader spectrum, tech sector really causing a drag on the overall market. IBM is in the Dow Jones Industrial Average. It is a blue chip stock, so it's not really dragging down the Dow, obviously. But I decided to take advantage of some high implied volatility in here, and was looking at this on the chart yesterday, breaking above those the 200-day moving average, and was looking at it on my watch list. So I didn't see any earnings in IBM on the watch list. Still calculating for the last remaining earnings that we're getting, basically in Costco and in Adobe, that are coming out on like the 14th of this month, and then Nike on the 21st. So like those older ones are the ones that are still getting those indications on my watch list as to an earnings. So I jumped on the fact that it had high implied volatility and was moving higher. So sold some puts in there in the January, sold the 140 puts for 38 cents. Now, when I pulled up the chart to get ready for this daily market commentary, I was like, lo and behold, there's an earnings in there. So in this time bracket that I have in these January contracts, there is an earnings. It is on the very last day, but it is going to hold on to some implied volatility, and I might see implied volatility rise despite that fact that I might get a directional move to the upside. So I'm going to have to bank on my directional move, hope that implied volatility doesn't really start moving a whole lot higher in the interim. I'm going to try and cover this relatively quick, but we all make those mistakes. I didn't dig in quite deep enough. I took off a couple of trades and decided I wanted to add some more positive deltas to my portfolio, take advantage of implied volatility, and didn't pull up a chart on it and see that now that there is an earnings in there. So not good, but we all make those mistakes and got to live by them. But I'm going to be looking to cover that one relatively short. Maybe even if I can just cover for my commissions on a profit, I might be looking to do that. All right, Visa, we got to move to the upside today. Nice move. As a matter of fact, I think even MasterCard was breaching, testing its all-time highs. But Visa's moving higher right now by $1.22. Allowed me to get out of my Visa trade, which was in the January. I did the January, sold the 100 puts, if you remember. This was a trade that I put on before that MasterCard trade. It went against me basically in this Visa trade, and implied volatility continued to rise in this sector. I was able to add some MasterCard to that trade as well. So that's what happened. I got this directional move, got into this trade basically on the 29th of November. So 29th was right here. It got this big down move, snapped back, started getting the confirmation. The upside was looking pretty good. Then the market kind of fell out of bed again. This is about when I added that MasterCard trade to this. I didn't want to just add to Visa. I wanted a little bit more diversification and not really put all my eggs in one basket with just one particular stock. So that's why I added MasterCard. It had high implied volatility also. So then we've just recently gotten this move that's directionally in our favor and implied volatility to come out of it. So that allowed me to get out of this trade earlier. It being in the January, we're not going to see that much theta decay happening in these January contracts. It really starts picking up after when there's only about 35 days to expiration. In the January contract, there is about 38 days. So starting to get into that real theta decay slope, but the volatility coming out of this particular underline allowed me to get out of this trade before all that theta decay starts happening. Theta in Vega, when Vega contracts, you see the premiums come out much faster than just watching theta decay. So when you get that volatility collapse, that's what we're looking for. And that happened in this particular underlying for me. So in that January, I sold the 100 puts for 51 cents, got out of them for 22 cents. So nice trade there. Just now making those all-time highs, I believe. We're trading right there right now. Then on to Intel. So I have this on a daily chart here. Been watching this one really closely because I'm trying to get out of my Christmas tree in there, which is the December. It's the December. I am long the 43 puts, two times for every 3 of the 44 puts I'm short, and then long the 56 puts once. So that trade, if I can get it, when it gets up here right around that 44, that's where I'm going to see the most value for this. I'm trying to get out for about 25%, 30% increase in my of the max profit potential in this. So max profit for me on this trade is $1.60. I paid 40 cents for it. And so I'm trying to get out for about an increase of 43 cents in a sense, or 40 cents for the most part. So that would be a quarter the max profit potential on this. So hopefully I can get a little bit more of a move here today. I'll be able to get out of those. I'm about a nickel away. I think it's trading around 79 cents. So if we can get a little bit higher move, I'll be happy with that. Yesterday I was working it for around 91 cents and it was about a dime away. So it's not really moved a whole lot from yesterday. And then I think that's about it for everything. Oh, one more thing. Verizon was the one that I just got before I went on here, so I don't have a chart up for it. So Verizon making a nice move higher here. Doesn't have earnings in this cycle. It comes out the 23rd. So that's after the January contracts expire. Decided to play a little bit of bullish move. It's going straight up here right now and got some high implied volatility going with that because of that big move, which you don't always see. So I'm going to try and take advantage of that as well. So I went into the January, sold the 50 puts in there for 39 cents. So 50 puts being below this value area high, it should act as support as it did on this bounce. I don't really expect it to get down that far. So hopefully we can get out of this trade rather soon too. All right, and that's about it. Friday's webinar is going to be on the long puts, so check that one out. It is going to be great when we're really kind of in flux here between high volatility of earnings, which will be coming up relatively shortly. But in that time, in this January, there's a lot of stocks that have low implied volatility that we can take advantage of a downward move in, like I did with NVIDIA. If you guys watched yesterday's market commentary, did a downward move for NVIDIA. It's down nicely today, so that trade's working out good as well, as that NASDAQ pulls off. So I'm going to show you what all the rules are in and around that and how to set yourself up for success, because it is a low probability trade. but I'll show you how to increase your probabilities of success with that trade. All right. So go to protraderstrategies.com and sign up for that. If you can't take that, take it easy.